What is good, everyone? We are back with an absolutely thick and juicy trade recap on the NASDAQ for Friday, March 13th. I'm going to be going over two trade setups. I did not take any trades today. I have been wanting to be risk off as of recent on Fridays. Typically, Tuesday, Wednesday, Thursdays have been the best trading days for me. I wasn't totally against taking anything today, but just going into the weekend, I already had a great week. Just on an evaluation account that I'm trying to pass with Take Profit Trader. So had a great week. Just started the account this week. I'm about halfway there, and then hopefully next week I'll get funded with that 150K account. So real quick, here's the progress on the TPT 150K evaluation account. I just bought it last weekend on Sunday, traded 4 out of 5 days this week, and made $4,360 towards the total profit goal of 9,000. But without further ado, let's jump into the play that every iFVG bro and their mother is talking about today on social media. Here it is, guys. So, this 1 minute iFVG long at market open, basically, we close above this iFVG at 937. We do have overall bullish structure going into this. I think this is like an A setup, just maybe not A plus. We do have a really good liquidity pool, honestly, because this is a data high. I don't know what this was. Some sort of news spike this morning at 8:45, I guess. Um, this was a good play. Here's what I will say of why it's not like A plus 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 plus. We didn't like this isn't that significant of a liquidity sweep right here. And there's still we could have easily gone lower. So if you trade ICT concepts, you know that the market moves from imbalance to imbalance, inefficiency to inefficiency, internal liquidity, external liquidity. So when I see price come super close to this 1 hour fair value gap, pretty much only 10 points away, and we don't tap into it, it's like, oh, there's this liquidity right below here. This could have easily been a fake out, and then we come remanipulate this low again, and then we get like the real setup after this. So I was weary of this. If you look at it again on the 1 hour, like just look at how obvious this gap is. It's a nice big 1 hour FVG right in the middle of this price range. The 50% is probably look at that too. Look, the 50%, which price likes to pull back to the 50% premium to discount back and forth. That also lines up right with the top of this 1 hour FVG. Did this 1 minute sweep at open hit that 50%? Nope, it's right here. So yeah, obviously, like if you took this long, it printed and you won. I still think it's an amazing pattern trade, 100%. And I'm not saying it's only a pattern trade. Like it's still a good trade. Um, but I just don't think it wasn't A plus plus plus. Um, for that reason of like there's a really important hourly fair value gap and the 50% of the range sitting here as well. So that's that on that trade. So, part two of this trade recap. So, what happens now? We didn't take this iFVG long. We're just blasting to the upside. We just went about 160 points. So, like, what are we looking for now? Well, we're clearly not bearish yet. We have like we're clearly bullish. Like, look at this 15-minute candle, just absolutely printing. This looks like a pretty obvious buy side liquidity target up here. So, like, at this point in time, I'm still long. And what do I want? I want a rebalance tap back into this 15-minute fair value gap if it gives us that. So, what do we have? All right, so boom, we create this beautiful 15-minute bullish fair value gap. And what I'm looking for now is just any sort of tap into it, and then like a 1 minute or a 30 second or a whatever iFVG long to continue, because I've just seen that work so many times. Market loves to make a big move at open. You basically call it like the opening range move, but instead of taking the move, you wait for the rebalance back into it, the tap and the go, and it's just it's a bread and butter model. So this is exactly what I'm looking for. So, but you don't know if we're gonna get it. So, all right. So right here, I see this. So right here, I am like, okay, I'm gonna take this long if we close above this. I was already gonna do it. I was gonna take it with 10 micros. And not only did we beautifully tap into this 15-minute fair value gap, again, what else did we do? Oh, beautifully tapped the 50% as well. So we rebalance, and I'm thinking like we should continue further up here if we close above. So what happens? We wick above it. Nope. And then when I see this, I'm like, all right, I'm not really interested anymore. Like, I want to see it happen like fast. Like, if this candle right here that wicked up closed right here, I would have been in this trade. I would have entered here, take profit probably here, and stop loss below the lows for roughly whatever 1.3 risk to reward. But that doesn't happen. So once this happens, I'm like, all right, I'm kind of leaning bearish now, or just like I don't really know what's gonna happen next. So I go to the 5 minute, and I'm like, oh wow, this is a massive 5 minute that just got inversed. We inverse this to the downside. I'm like, all right, this could dump now because this is such a significant gap. That getting disrespected is not bullish anymore. And then I check the 15. Oh, what do we have on the 15? Also a commanding inverse below it. So now I'm like, okay, we inverse on the 5, we inverse on the 15. My bias is officially bearish now. All we need is a lower time frame like entry. So we're on the 1 minute here. We have our 5 minute and our 15 minute fair value gaps drawn out. We inverse them both. So all we're looking for is like a retracement into here somewhere, an iFVG, back down. As long as we don't close back above this, and that happens inside of these gaps. That's what we want. So before we do, let's check the 1 hour really quick to see if there's any other confluences. Oh, wow. We beautifully filled this 1 hour fair value gap that we're now bouncing off of up here as well, giving us even more confluence. for a justified reversal here. So we go back to the 1 minute. I'll delete that 1 hour. Um, so we go back to the 1 minute. Let's see. Not really anything. Not really any gaps. There's like a tiny 1 minute. That's not good enough. Still too low. What do we have? What do we have? Coming up. Still pretty wicky, pretty spiky. Nothing like clean. Okay. That's a pretty big candle up. Okay, wow. Pretty obvious gap here. Um, very obvious gap on the 2 minute as well. So this is the play, guys. This is the A plus play right here, in my opinion. If we get this close to the downside, like it looks like we're bearish now. Um, we have these lows, and like we're still high in the range, so we have plenty of room to go down. So we get this, and then whoa, huge candle. So yeah, bearish sign, but are we gonna enter all the way down there? Absolutely not. 86 point stop, and then like hit this internal liquidity right here, and then probably like bounce back up before we continue. We can't take it down here. So what you could have done in this situation is just simply like set a limit order like somewhere up here. Like anywhere up here would have made the RR so much better. Like we do have this order block right here. We did create this fair value gap. You could have got in on like a tap here, maybe at the 50% or whatever. You just can't take the short this low. But it's still an amazing play because now we have confirmation. This is just too low to take it. So it's like, okay, boom, the next candle, like you could have just shorted like right here. Like let's just say you just short it like right when it gets into the middle of this gap. Stops up here. And now at this point too, we're also forming this low resistance liquidity, basically this trend line liquidity, where we have these stacked lows. And so if we did enter here, like I would go like 1-to-1 for my first target. So we have this. It's showing equal lows on the indicator. It is equal lows, but I don't put much weight on this, on just this random low, but whatever. So that's 1-to-1. And what else are we also targeting? Oh, the 1 hour obvious gap in the middle of the range that I was talking about earlier on trade number 1 that I thought price should go back into. And where's that target? Well, I'll draw it out on this black line. We'll see what it looks like on the 1 minute. It's right here. So you could, that could be a scale spot. 1-to-1, 1.2-to-1 risk to reward. If I did take this trade, I would have scaled 50% probably right here at the 1-to-1, and then I would have moved my stop loss to break even. And then I would have just let the rest. I would have just let the rest ride because there's a lot of room to the downside. So, and honestly, I might have just been all out there once I saw that huge candle. Probably get a small pullback, and then we just keep dumping. So I thought this was the real A plus trade of the day right here. So many confluences, just beautiful. Um, not an ideal entry right on the inversion. That's why you have to be smart. You can't just enter this low just because the inversion. Like look at how many points it pulled back and it still held. It pulled back like 42, 43 points and that still played out perfectly. So don't get too trigger happy and just slam this. If you bought on the, if you sold on the pullback, just absolutely beautiful play. So that's it. That's it for now. Let me know if you guys found this video helpful. Drop a comment. I'll respond, answer any questions, and I'll catch you on the next one. Peace.